What is up, everybody? Welcome to the channel. Thanks for stopping in. In today's video, what we're going to be discussing is how to detect the end of the bear market. So a lot of us know, the market's taking a downturn. And that you want to buy when things are in the red, but when is the best time to buy? How do you know when the market is done dumping and when things might start to turn around? I've really narrowed this down to two indicators. These are the indicators I use personally. I have been in the crypto space since 2016, so I was around for the 2018 bear market. Got to see all of that. And I've also pulled in some of my external financial knowledge as well. So I have a degree in finance. I was also part of an investment fund for a little while.
We've got a badass over here.
Also, again, there's some knowledge that I pulled from that too. And so before I get into that, guys, I just want to say I'm trying to take this channel to the very top of crypto YouTube. I want to be an honest platform for everyone to come to for crypto content. I want to be able to give the good and the bad and remove all of my biases as much as I can from the topics. I think there's a lack of information that is straightforward in the crypto space, especially when it comes to YouTube. It seems like most of them are just sort of pep rallies around tokens, and I don't think that's fair to you guys, because I think it's important that you acknowledge the good and the bads. It's going to help you save money. It's going to help you position yourself the best way possible while mitigating as much risk as you can, because you can't do that if you never hear the negatives about something. And if you don't understand the negatives, and nobody wants to talk about the negatives who does understand the negatives, then you're really never getting that information. So again, I want this channel to be that source of information for you guys. So please help us out, take us to the top, hit that subscribe button. With that being said, let's jump into it. All right, so before we dive into the indicators, it's important that we understand how crypto is treated as an asset, okay? So institutional investors look at crypto as a risk-on asset, okay? As much as we like to remove ourselves and, want crypto to be its own independent market, it may very well be someday, but it's still not quite there. So until then, it is being treated as a risk-on asset. Now, what is a risk-on asset? A risk-on asset is an investment that people get or take when they want a high-risk, high-reward sort of investment, okay? It's a way to add more risk and capitalize on a good market. It's also the first thing that they cut when the market takes a downturn, okay? It's high risk. You cut your risk when you're de-risking in a down market. You go to the very tail end of that curve, and crypto would fall into the end of that curve. So that's also why you see it fall off before every other market, is because, again, institutional investors are looking at crypto as a highly risky asset that they're willing to buy when the rest of the economy and the markets are looking really good. But when they're not looking good, they are going to cut crypto out of their portfolios and go to more traditional investments, less risky investments. So that's really important to understand, okay? And that's going to lead into why these other indicators matter, okay? So the first indicator that you're going to want to watch, and this is going to sound kind of silly. Some of you guys might disagree or think that, oh no, this isn't, it's not true. We're decoupled. That's going to be the stock market, okay? Now, before you go and you're like, oh, this is silly, these are bad indicators, listen to me when I'm telling you this, okay? Investors, again, going back to what I was just saying, because they treat us as a risk-on asset, they're not going to invest in crypto unless the stock market and everything else is doing well. In particular, the NASDAQ. So the NASDAQ is known as sort of like the tech exchange. So when the NASDAQ is doing well and it's sustaining a long-term run, okay, so when it really starts to shift and it looks like it's heading back in the right direction, and the economy as a whole is looking really good, we've got a good outlook for the future, things like that, that's when these investors will start adding risk. That's when they'll start coming to the crypto space and buying crypto. Now, that doesn't mean the first green day a market has, you should go and buy a bunch of crypto, because that's not how it's going to work. You're going to have plenty of time, okay, guys? I cannot stress that enough. You're going to have time to buy the bottom, to buy this dip, and if you do, you'll be just fine. It's better to buy a little late into the next run than it is to buy super early and miss out on a way better entry, because right now, the economy's looking a little bleak, right? We all know that. The market's not looking too great, and so we don't know where the bottom's at yet. We haven't seen these indicators yet, but again, that'll be one of the first things that happen that'll tell you that we're starting to shift, is that the stock markets will start to turn around, sustain runs, and it'll be like a month or so of runs before people really start even considering adding crypto to their portfolios. You got to take that with the market outlook. Now, indicator number 2, and this is going to be on the retail side. So as we know, retail is still the major driver of a crypto bull market. So the altcoin seasons, the fun crypto markets that we know and love, start with retail, okay? Retail investors, so me and you, are the ones buying these altcoins that are driving them 1000x. Institutional investors don't want to take their big positions in these small tokens. They stay far away from them typically. Now, there are VCs and things like that, but that's not what I'm talking about. I'm talking about the major players, the big banks, those ones that are adding Bitcoin to their portfolios. They're not adding any of these altcoins. So retail is the one that is driving those altcoin seasons. So how do you know when retail is going to turn around? Well, again, indicator number 2 here is going to be excess savings. Okay, so if you pay attention to the savings rates, and this is public data, you'll see it every now and then on CNBC and different business podcasts, things like that. They'll post charts every now and then that show the U.S. savings rates, and there's also other world economy savings rates that you can go and look at. When those start to get really high and consumers and retail investors are flush with cash, a lot of that cash makes its way into crypto. So when there's a lot of excess cash there, you can expect that some of that is going to flow into the crypto space, and that is what is going to indicate the beginning of altcoin markets. Okay, so yes, it's true that Bitcoin typically leads the market, but it's usually very fast after that, if retail has cash, that the altcoin season starts. Okay, it's not like you have this big, massive Bitcoin bull run, then an altcoin run. It was kind of like that back in the early days, so people kind of reference that and think it's going to happen that way. But nowadays, so much has changed in the crypto market that it's usually like boom, boom. So in 2020, when the market shifted, Bitcoin went up, Ethereum went up, and then very fast after that, the rest of the market followed. So it wasn't like you had much time to go and ride one run and then hop to the altcoin season. It just didn't play out that way. And I don't think as time goes on, it's not going to, especially now that crypto has become more prominent. Retail investors are going to become more prominent, and so they're going to jump right to the stuff that they feel like they can make 1000x on, turn $100 into $1 million. That's the goal of the retail investors for the most part. So again, you want to watch those savings levels and anything that can affect those savings levels. You're not going to have an altcoin season if retail is getting hit with like what we're seeing right now. High gas prices, high rent prices, inflation everywhere you go. These are all constraining monthly budgets. So what's happening right now is people don't have a lot of savings. They're pulling what they have out of crypto and they're using it to pay the bills. As long as that is going on, crypto cannot turn around. Okay, the market cannot shift around. The altcoins can't shift around. So again, you want to watch the savings rates and things that can affect the savings rates. So, if there's more stimulus news, if there's news that comes out that says wages have grown the fastest they've ever grown and now we're making $1 million each a year. Now I know they have been growing, but they haven't been outpacing inflation. That's key here. Okay, they have to outpace inflation. They're not. But if they were to, and something major were to change, that leads to excess cash to the retail investors, which is what you want to see to start an altcoin market. So, or an altcoin bull market. So again, these two indicators combined are going to, when they happen at the same time, are really going to show you when the market's shifting, okay? It's going to happen, and again, you'll have time to detect that. You'll start to see the stock market doing well. You'll start to see the economy outlook starting to get a little better. Maybe the stuff in Ukraine stops, and that kind of leads to a bump, and all of a sudden supply chains start working themselves out and things sort of get back to normal on that end. You start to see the stock market rise. That's going to be sort of like your first indicator. All right. Then you'll start to see that, job growth is doing well, inflation is down, people are flush with cash, they have, good savings, those sorts of things. Now we're in a good spot where you can start buying. And at that point, usually pretty soon after, as long as things sustain that way, you will see a crypto bull market, because again, that's when people will be willing to put on the risk on the institutional side, and when retail will have the money to participate in the crypto market. So these are the two indicators that I will be using myself. It's what has worked for me pretty well so far in 2020 when the whole COVID deal came around. Now that COVID crash was a black swan event. There was no way to really detect that. But after that happened and things started to shift around into the most recent bull market, you started to see stimulus checks getting passed out, savings rates were up, stock market was looking good, businesses were getting help, those sorts of things, interest rates really low, so borrowing money was easy for companies. These sorts of things are what started and marked the beginning of the crypto bull run. So as long as you're paying attention to these, you don't have to watch the chart literally by the second. And it's probably better that you don't watch the chart by the second. I have tried that and it does not work. I end up overthinking everything and trying to catch the very second of the bottom. And it's just silliness, because a lot of times you'll end up not catching the bottom and hurting yourself in the meantime. So I hope this video was helpful to you guys. I wanted to throw some stuff out there because everyone's talking about, you want to buy when the market's red, but how do you know when the bear market is over? How do you know when the bull market has started and when you can start shifting some money around? And that's what these indicators will help you decide. So again, guys, I hope you enjoy the video. One more time, please subscribe to the channel. Help me take it to the top, and I will catch you guys next time.